Good morning, students. Welcome you all once again on the live virtual classes of Board of Studies of ICAI. Friends, today we are going to start one of the very basic, very important asset-based standard, Ind AS 16 property, plant and equipment. The standard which is based on the fixed assets, right? So students, this is one of the most important standard in the category of assets. If you read this standard properly, if you understand this standard meaningfully, it will help you in other standard also, like Ind AS 38 intangible assets, Ind AS 40 investment property, Ind AS 105 non-current asset held for sale, and discontinued operations, right? So this one standard will help you in the next 3-4 standards if your understanding is correct, proper, and absolutely great, right? So let's understand this standard. Let's read this standard very well in the next 2 classes. Okay. I can see few students have joined so far. Saurabh, Neha, Sanjay, Leela, Udandam, Nitish, Naman. So good morning, everyone. So friends,
Good morning.
coming to the, yes, very good morning. So coming to the universe of standard based on the fixed assets, right, in various gaps. In accounting standard, we have AS10, right? We have 2 standard or 1 standard in accounting standard.
AS10.
Whether AS6 is also there, depreciation accounting.
No,
It was not there.
it it was there.
Yes, it was there, but it got deleted in 2016. Okay. So as of now, only accounting standard 10 is there. So in the earlier world, there were 2 standards in accounting standard, AS6 and AS10. AS10 was taking care of accounting for fixed assets and AS6 was taking care of depreciation accounting. Okay. Now, when Ind AS were notified in India, Ind AS 16 takes care of property, plant and equipment, and it also includes the concept of depreciation. So in Ind AS 16, end-to-end concept was there for fixed assets, end-to-end concept, right? So likewise, to marry accounting standard with Ind AS in this area, because this is one of the important area, so our institute and Ministry of Corporate Affairs have also deleted accounting standard 6 and they have included the concept of depreciation in AS10 itself, and they have also changed the name from accounting for fixed asset to property, plant and equipment in AS10. So as of now, accounting standard 10 is applicable in accounting standard. In Ind AS, we have Ind AS 16, and globally in IFRS, we have International Accounting Standard 16, property, plant and equipment. The name, the title is same in all 3 set of gaps, right? In all 3 set of standards, the name and title is same, but the number is in AS, it is AS10, in Ind AS 16, and in IFRS, IS 16, right? If I talk about the difference between these 3, between Ind AS 16 and IS 16, there is hardly any difference. Means if you know Ind AS 16, you know the standard relating to fixed assets of 160 countries. How many countries?
160 countries, sir.
Not 60, 160.
160, sir.
160 countries. Yes, means if you go to Singapore and somebody will ask you, what is the accounting in case of property, plant and equipment? You will be able to explain that accounting. The only thing you have to keep in your mind, instead of Ind AS, you have to use the word SGFRS, Singapore Financial Reporting Standard. When you go to Malaysia, if somebody will ask you, do you know how the property, plant and equipment is recognized, measured, cost model, revaluation model, depreciation, you know everything, right? The only thing is, instead of Ind AS, you have to use the word MFRS, Malaysian Financial Reporting Standard. If you go to Bhutan and somebody will ask you, do you know the accounting of fixed assets, accounting of PPE in Bhutan? So you will say yes. The only difference is, instead of word Ind AS, you have to use the word BFRS, Bhutanese Financial Reporting Standards. Okay. So that's the only difference. So it means this Ind AS 16 and IAS 16 does not have any difference. And as I told you that IFRS IFRS are applicable in almost 160 countries by way of adoption or by way of convergence, right? But talking about the difference between Ind AS 16 and Accounting Standard 10, yes, we have small 2-3 differences, not major differences, but we have 2 differences. Okay. So this is the universe of the gap relating to the fixed assets. So friends, as the name suggests, the name is property, plant and equipment. So this standard talks about property, land, building, plant, machinery, plant and machinery, equipment, office equipment, furniture, vehicles, right? Aircraft. So this standard takes care of all these items, all the fixed assets, tangible assets. This standard is applicable in the balance sheet of Panwala to Reliance Industries. Means every company which is operating, they have fixed assets. Okay. Doesn't matter a large number of fixed assets or a small number of fixed assets, but they must have the fixed assets. For example, if there is a Panwala, he must have some furniture, chair, table, right? He has some, kind of a setup. Okay. So everybody has some chunk of fixed asset. For example, I am teaching you guys, I am sitting on a chair, my laptop is placed on a table and mobile is on my right side. I am teaching on my laptop, right? So what is all these? These are fixed asset. These are property, plant and equipment. These are the fixed assets. Okay. So friends, these fixed assets are known as a property, plant and equipment. These fixed assets are known as property, plant and equipment, right? Correct? Yeah. So we are going to talk about these fixed assets, which are nothing, which are the property, plant and equipment. Okay. Yes. So now let me take you to my PPT and let me talk about the agenda of the standard. Friends, what we are going to cover in this standard, in Ind AS 16, we are going to cover the objective. We are going to cover the objective. Okay. Objective of Ind AS 16. Every Ind AS start with the objective. If I will ask you that, Saurav, what is your objective of attending these classes? So you have an objective. Your objective is to learn FR and crack exam, correct? Crack the CA final examination. That's your objective. So likewise, every standard has an objective. We'll talk about the objective. Every standard has a scope, that on which area this standard is applicable, where this standard is applicable, where this standard is applicable. Okay. Objective, scope, right? So friends, then coming to the recognition. Okay. So what is the recognition criteria? And there are 2 kinds of recognition: initial recognition and subsequent recognition. What is meant by initial recognition and what is meant by subsequent recognition?
Initial recognition is when the asset is purchased, and subsequently, when the asset is purchased, the asset can be.
Yes, you're right. So initial recognition means recognition at the transaction date. Correct? And it is not related with only asset. It can be with anything. So if somebody will ask you what is meant by initial recognition, recognition at the transaction date. Okay. You bought a car today. What is the date today?
21st.
21st. Okay. You bought the car today. So the accounting of car, when you recognize the car in the books of account, it is known as the initial recognition. After 5 days, you have done some major expenses. For example, you went to DC. Have you heard about DC who are modifying the cars?
Yes.
Yes. So these people are in the business of modifying the cars. आपने वो मूवी देखी टार्जन द वंडर कार?
Yes, sir.
Yeah. So you want to convert your normal Maruti car into the Tarzan the Wonder car. So you have to done the modification, right? So after 10 days, you went there and you want to modify the car. So you have incurred a huge expenses, right? So now those huge expenses needs to be capitalized. That is a subsequent measurement. You recognize an asset. Now that is a subsequent recognition, right? Now you're recognizing your subsequent expenses. Okay. So initial, we'll talk about the initial recognition and the subsequent recognition, means the initial cost and subsequent cost recognition, right? Then measurement, we'll talk about that at what value this asset is going to be measured and what are the elements of the cost and what are the criteria of the cost. Okay, we'll talk about those things. Okay, then we'll talk about initial measurement and subsequent measurement, right? Initial measurement means measurement and recognition, and subsequent measurement means measurement after recognition, technically at the reporting date. So measurement at recognition means at initial recognition, means at the transaction date, and measurement after recognition means at the reporting date. Like you have to check the impairment, you have to either carry that asset at cost or at a revaluation model, you have to charge depreciation. So these are the subsequent measurement. Then there is a derecognition criteria and there are some sort of disclosures. Friends, these are the things which we are going to cover. And of course, in the subsequent measurement after recognition, we'll discuss in detail cost model, revaluation model, depreciation, right? Depreciation method. Do you know the depreciation method?
Yes, sir. SLM, WDV.
SLM, WDV, unit of production method, right? Have you heard the word impairment?
Yes, sir.
Yes. So friends,
Yes.
good part of this standard is if you have read accounting standard 10, if you have understood accounting standard 10, your most of the job is over here. I would say, and let me give you benefit of doubt, your 50% job in this standard is over, right? 50%, not 100%, 50%. So at least this, in this standard, in Ind AS 16, this is not Suna standard. This is Suna standard, right? Suna standard. This is something which you have already heard, not blank. Okay. Yes. So with this context, we'll start this standard. This is a asset-based standard, full-fledged standard, and this standard touches all the pillar of accounting. You know, I talked about 4 pillars of accounting. Can you tell me what are the 4 pillars of accounting or accounting standard?
RMPD.
RMPD. Very good.
RMPD.
Recognition,
very good.
measurement, presentation,
Yes.
disclosure.
And disclosure. RMPD.
So I feel glad when, you know, my students talk about with the confidence, sir, RMPD, right? Recognition, measurement, presentation, disclosure, right? So recognition means when that item will be recognized as an asset, as a PP, right? So we're going to talk about recognition criteria. Then once an item is recognized as a PP, but at what value it is going to be measured? Correct?
Yes,
So
sir.
that is measurement. We are going to talk about the measurement, initial measurement as well as subsequent measurement. Then once it is measured, how it is going to be presented, where it is going to be presented, we'll talk about the presentation. Then what are the quantitative and qualitative disclosure which represent faithful representation and relevant information? I have used these 2 words. Where I have used these 2 words? Many times I have used the word faithful representation.
Ind AS 1.
After Ind AS 1.
Yes, sir.
After Ind AS 1, I have used these 2 words in detail. Faithful representation and relevant information.
In accounting policies, AS8. Ind AS.
Have you attended the session on conceptual framework of financial reporting?
Yes, sir. In conceptual,
One
we
class on
discussed.
conceptual framework.
Yes.
Where I have also covered that the disclosures should be in such a manner that it will represent your faithful representation and relevant information, right? So we'll talk about what are the critical disclosures, what are the important disclosures which is beneficial to the user of the financial statement in terms of property, plant and equipment, right? So we'll talk about these 4 buckets in this standard: recognition, measurement, presentation, disclosure, right? And This measurement includes derecognition also, right? We'll talk about derecognition also. So we'll talk about the entire life cycle of PP&E. Okay. Yes. So with this, now let's start the journey of PP&E. Friends, objective is very simple. The title of the standard is property, plant and equipment, and it prescribes the accounting treatment of property, plant and equipment. Means it prescribes the recognition, measurement, presentation, disclosure. Okay. It also tells you how to determine the carrying amount. What is meant by carrying amount?
सर जिस अमाउंट पर अपन फिक्स्ड एसेट को कैरी करेंगे हमारी बुक्स ऑफ अकाउंट्स में
Yes,
आफ्टर
balance sheet.
डेप्रिसिएशन द वैल्यू
Yes, balance sheet mein. So the value at which I am carrying my fixed asset, I am carrying my PP&E in the balance sheet, right? So you remember the word carry forward, brought down, BDCD. Yes, carry forward, brought down,
यस सर
or brought forward, carried down. Okay. So the value in the balance sheet is known as a carrying value. जिस value पे carry कर रहे हो. And how to determine the carrying value? In the cost, you need to deduct depreciation, accumulated depreciation, accumulated impairment loss. When you deduct these things, then you get a carrying value. Okay. Depreciation charges we'll talk about, and impairment losses we'll talk about in this standard. Okay. Talking about the scope, this standard is applicable to all kind of property, plant and equipment. Can you give me an example of property, plant and equipment?
Land and building, machinery,
Yes.
car, computer,
Yes.
furniture and fixtures,
Furniture.
ship, aircraft.
Yes. Aircraft, boat, vehicle, truck. Okay. Refrigerator, air condition, water cooler. All these are property, plant and equipment. Okay. Ind AS 16 is applicable to all kind of PP except PP classified as held for sale. Friends, this held for sale, there are criteria in Ind AS 105, then when an asset will be considered as a held for sale. We'll talk about those criteria, but to cut a long story short, when a PP is classified as held for sale, then it is not covered under Ind AS 16, it will move to Ind AS 105, right? So we will be discussing and covering Ind AS 105 in detail in the next classes. Then friends, second, biological asset related to agricultural activity. Friends, we will cover Ind AS 41 also. And friends, Ind AS 41 talks about biological asset, living animal or plant. Okay. So this living animal or plant, this is covered under Ind AS 41. And of course, those living animal and plant is not covered under Ind AS 16 if it is related to agricultural activity, right? For example, the company has purchased a lion so there is an entertainment company, and the entertainment company has purchased a lion for the purpose of entertaining the audience, not for the scaring the audience. Okay. Have you seen lion in circus? Have you seen circus any time in your life?
Yes, sir.
Yes, sir. In zoo.
And that lion is jumping between the rings of the fire. That is tame and trained lion, not the wild lion. Okay, tame and trained. So friends, whether that lion is a biological asset.
Yes, sir.
No, no, sir. It's not a biological asset.
Lion is not a biological asset. What
It
you
is
are
not
saying, Swaminathan,
related
it is
to
a biological
agricultural
asset.
activity.
So
No,
the
no, no.
I think that it is biological asset.
See, when you used for the circus activity.
Yes, I am talking about, so forget about circus activity or agricultural activity. So I am asking whether lion is a biological asset or not.
Yes, sir.
Yes, even me and you are biological asset.
Yes, sir.
We are also living animal. Okay. So basically, biological asset are living animal or plant. We are also human being now. So we are living creature. So lion is a biological asset, but that lion in the circus is not related to agricultural activity. That circus, entertainment of audience is not an agricultural activity. Correct? नहीं है ना agricultural activity.
Yes, sir. Nagi.
So lion is a biological asset which is used for commercial activity. which is not used for agricultural activity. So whether that lion will be covered under Ind AS 41?
No.
Yes.
No. In Ind AS 41, only those biological assets will be covered which are related to agricultural activity. And my dear friends, where if the company has purchased a lion for 10 lakh rupees, one lion, then where that lion will be covered? Ind AS 16. Ind AS 16. That lion is a property, plant and equipment in terms of entertainment companies. Okay. Yes. So why I have given this example to make you guys aware that this biological asset, if it is related to agricultural activity, then it is not covered under Ind AS 16. Otherwise, it will be covered under Ind AS 16. Okay. Except the negative list is given. Okay. Recognition and measurement of exploration and evaluation assets. Okay. So if there is any exploration and evaluation assets, mineral rights and mineral reserves such as oil, natural gas, and similar non-regenerative resources, these are covered under Ind AS 106. Okay. These are not covered under Ind AS 16. So guys, can you please keep on mute? Somebody has yes. Okay. Right. But in the mines, when you are extracting iron ores, when you are extracting coal, so the asset which is used in the extraction, for example, truck, crane, if these assets are used for the extraction of, mineral resources, in that case, those assets will be covered under Ind AS 16. Truck, crane, lorry. So these are covered under Ind AS 16. Okay. So this was the scope part. Friends, very, very, very important item. We have arrived. Definition of property, plant and equipment. What is the definition of property, plant and equipment? Is anyone aware about the definition of the word property, plant and equipment?
So which is tangible assets used for production, supply, administration, rent over a period of more than 12 months.
Okay, very good. So PP is a tangible asset. Which kind of asset? Tangible asset. And what is meant by tangible asset?
Which can be touched and
Which
felt.
we
Which can be
touch and
touched, which can be seen, which can be filled, which you can feel, right? So like example, table. Table is, I can touch table. I have put my hands on the table. So I can touch laptop, I can see laptop, I can feel laptop. I'm sitting on a chair. I can touch chair, I can move chair, right? So these are the tangible assets. So all PPEs are tangible assets. So whether software is a PPE?
No, sir.
No,
It's
sir.
an intangible asset.
Intangible assets. We can touch and
We can touch software?
no, sir.
No, right? So software is not a PP. Why? Because it is not meeting the first criteria of the definition of PP, that PP should always be a tangible item. And those tangible items should held for use in production or supply or rental or administrative purposes. Those tangible items should used in the production of goods and services, supply of goods and services, for rental purposes, for administrative purposes. For example, machinery. Whether machinery is a tangible item?
Yes, sir.
What is the use of the machinery?
Held for production.
For
Held
production.
for production. Machinery used for the production, for producing goods. Whether truck is a PP?
Yes, sir.
Yes,
Why?
sir.
Truck
Or
is a
supply.
tangible item. Truck is a tangible item.
Tangible and supply. So used for supply.
And it is used for transportation of goods and services. Transportation of goods, right? So truck is a PP. It is a tangible item. It is used for supply of goods. Used for transportation of goods. Okay. Yes. Now, let's say there is a company which is into the business of renting cars. And have you seen in wedding, in especially North India or Eastern India, at least I have seen in Eastern India and North India, if there is a wedding, so the वो बारात होती है ना, so the
sir.
the groom who is coming into the car, that car is either new or that car is a rented car, big car. Okay. So they took the car on a rent for a day, right? So BMW, Audi, so one of my cousin who is living in Eastern India, so in his wedding, he booked BMW car for a day. He paid a rental of 15,000 rupees, right? So on his wedding day. So the point is, let's say I am an entity, I am a company, and I have bought 10 cars. Okay, I have bought 10 cars. Whether these 10 cars are PP?
Yes, sir.
Why? It is a tangible item.
A tangible
But
item
is it
and
used in the production?
no rental.
Rental. So these cars are used for rental purposes, or for administrative purposes. Now, you bought furniture, right? You guys are working in a company and you are sitting on a table, sitting on a chair, using table, using laptop, computer, using coffee vending machine, refrigerator, air condition. Whether these items are tangible item, answer is yes. Whether it is held for use in production, no. Held for supply of goods, no. Rental, no. Then why it is a PP?
Held
It
for
is used for
administrative purposes.
administrative purposes, right?
Administrative purpose.
Purposes. It is used for administrative purposes, right? These all are administrative purposes. Okay, and it is expected to be used during more than one period, which is more than 12 months. Okay, more than one period. If these three conditions will be satisfied, then you can say that if these three conditions will be satisfied, you can say that that item is a property, plant and equipment. That item is a property, plant and equipment. Friends, there is an exception to this. There is an exception to the rent portion. What is that exception? Can anyone tell me?
Land and building given for rental is coming under the investment property, not under the PPE.
Yes. So my dear friends, remember one thing. All the tangible item, if it is held for use in production, used in supply, used in rental or administrative purposes, it will be considered as a PPE, except land and building. If land and building is held for rental purposes, then it will be considered as an investment property. So there is a separate standard on investment property, right? There is a separate standard in Ind AS 40, and in Ind AS 40, when you read Ind AS 40, it says that two item for two purposes, right? Land and building, two item, two asset, land and building. If held for two purposes, if held for rental and capital appreciation. Land and building, if it is held for rental purposes and capital appreciation purposes, then it will be considered as an investment property. So what is the exception? Exception are two assets. If land and building is held for rental and capital appreciation, it will not be considered as a PP. It will be considered in the standard called investment property, right? Friends, I hope my Excel file is visible to all of you.
Yes, sir.
Visible, sir.
Yes. So what is a PP? PP is a tangible item, right? Plus, which is held for use in production of goods or supply of goods and services or rental purposes or administrative purposes, and it is used for more than one period, technically 12 months, more than 12 months. Okay. And what is the exception? Exception is land and building. Land and building held for rental purpose will not be considered as a PP, and it will be accounted for as per Ind AS 40, which is investment property, okay? It will be accounted for under Ind AS 40, investment property, right? Clear or clear?
Clear, sir.
Clear. Okay. Now let's discuss this case study quickly. XYZ Limited has acquired a land to construct a plant for manufacturing goods. Also acquired below item for the business. So XYZ Limited acquired a land to construct a plant. So land, plant. What is the nature of these assets? Land and plant?
PP.
Land is a PP. Okay. Plant?
PPE.
Plant is a PP. Okay. Land should not be investment property.
No, sir, they are used for the manufacturing of the goods.
So land is used for the construction of the plant. So on this land, plant is constructed, machineries are installed. So it is not held for rental purpose. Okay. Yes. Machine A for production. Now, they have also acquired below item for the business. Machine A for the production. Is it PP?
Yes.
PPE, because it's a tangible asset. And
Building
used for
for
production.
Building for rental purpose. Is it
No, sir.
PP?
No, sir.
Investment.
Investment property.
Truck for transportation of goods.
Yes, PP.
Yes, sir.
Yes, sir, PPE.
For supply of
Furniture and fixture for office administration.
PP.
yes, PP.
Laptop for the employees for office working.
Yes, PP.
PP.
SAP software for maintaining records and books of accounts.
Intangible.
Intangible assets.
Identify whether
Not
above
PP.
items are
Not a
PP
PP.
or not. So SAP software is not a tangible asset. It is an intangible asset, and hence it is not a PPE, right? So this is the answer. Land PP, plant PP, machine PP, building, investment property, truck PP, furniture fixture PP, laptop PP, SAP software PP. No, intangible asset. Okay. Yes. Clear? Clear or clear? Anushi? Anushi,
Clear,
whether
sir.
everything is clear? Anushi is there? I think she has dropped. Okay, she is not there. Yes. So everything is clear. Nitish, everything is clear? Sure. Now coming to the recognition criteria. So up to now, we understood what is the definition of property, plant and equipment. Three things. It has to be a tangible item, which is held for use in production, held for use in supply of goods and services, held for use in rental purposes, held for use in administrative purposes. And it has a life of more than 1 year, more than 12 months. It will be considered as a PPE. Now coming to the recognition criteria. Friends, when an item will be considered as a PPE, when it will be recognized as a PPE. Okay. So we understood this is the definition of the PPE, but whether that item will be recognized as a PPE or not. So you have to see the recognition criteria. What I am saying, you will be able to appreciate after 5 minutes. Okay. Friends, there are two recognition criteria. Future economic benefit is probable and cost can be measured reliably. FC. What is the full form of FC?
Future
Full control.
economic benefit and cost can be measured.
No. FC full form is full control.
Full
Right.
control.
FC, full control. But in context of Ind AS 16, FC means future economic benefit is probable, cost can be measured reliably. Okay. What is the meaning of future economic benefit is probable? Friends, when you are acquiring machinery, what is the future economic benefit you are expecting from machinery?
Production of goods.
When you are purchasing a truck, what is the future economic benefit you are expecting from truck?
Transportation of goods.
Supply of goods.
Supply of goods. Right? When you are purchasing a laptop, what is the future economic benefit you are expecting from laptop?
Administration purposes.
Administrative purpose, maintenance of books of accounts, office working, yes. So these are the future economic benefits you must be expected from that asset. Okay. Means you will be able to use the asset for more than 1 year. Correct? And cost can be measured reliably. Cost can be measured reliably. Okay. So generally this cost can be measured reliably. This is most simplest kind of a criteria. This is the most simplest kind of criteria, right? And because when you purchase the fixed asset, when you purchase PP, you will get an invoice. You know the cost, right? But if you expect that, if it is probable that future economic benefit will be received, then only you can capitalize that item as a PP. And let me explain with the help of an example. Friends, government has given you a fixed asset free of cost. Okay. And of course, future economic benefit is probable, right? But you are not aware about the cost. And when I say cost can be measured reliably, I does not mean to say what you have paid. So if the market value can be known, then also you can capitalize your PP, right? So cost can be measured reliably and nobody is aware about the cost, and the cost is also not determinable because the market value is not there. It is only government who is providing this kind of goods. The market value is also not determinable. It is the MRP is not fixed on the product, on the package, no. So in this case, whether you will capitalize that item as a PP,
It may be, sir, government.
yes, it will be
Yes, sir,
government
we will
grant.
record it, sir.
It will be a government grant, but the question is, when you read the standard government grant, on one side you can recognize a grant and on the other side you can recognize as an asset also.
Yes, sir.
आपका asset तो आ रहा है ना, अगर government ने आपको दिया है तो asset तो आपके पास आ रहा है ना, and you will be using the asset for more than 1 year. So my question is, will you recognize that item, capitalize that item as a PP? It is a PP, but will you capitalize that item as a PP?
Yes, sir.
But how will you recognize? For recognizing a PP, you have to satisfy two conditions. Future economic benefit should be probable. Answer is yes. But whether cost can be measured reliably? Answer is no. So both the conditions should be satisfied. Both the conditions should be satisfied. You have purchased a car. Will you recognize that car as a PP?
Yes, sir.
Yes,
Yes,
why?
sir.
Whether future economic benefit is probable?
Yes, sir.
Yes, you will use the car for 10 or 15 years. Whether cost can be measured reliably?
Yes, sir.
You have purchased the car, you have paid the consideration. Whatever you have paid the consideration, that will be the cost of the PP. You got the invoice, correct? Right? You have purchased a machinery. Will you recognize that item as a PP?
Yes.
Why?
Because in future, we will get the future economic benefit by of production.
Yes,
And cost can be measured
Cost incurred.
reliably.
and you have incurred a cost also. You have paid a consideration also. You got an invoice also, right? So you know the cost. So there are two conditions for recognizing an item as a property, plant and equipment. Condition number one, future economic benefits should be probable. Condition number two, cost can be measured reliably. Means you should be aware about the cost. You can measure the cost. Now, another example. One of the company is operating in Delhi, New Delhi. They have purchased a machinery from China. Okay. And they have paid a consideration of rupees 1 crore. The machinery was transported from Beijing and reached to Delhi, Tughlakabad depot. Reached to Delhi. From Delhi, Tughlakabad depot, the machinery came to the factory. Okay. What is the cost?
1 crore.
1 crore is the cost. When the machinery reached to the factory, the Indian government, the government of India has banned the product which is going to be manufactured from the machine, that kind of machinery. Okay. Now my question is, What was the intent for purchasing that machinery?
Production.
Production.
But whether this entity will be able to produce, will get the future
No.
economic benefit?
No.
No.
Why?
Because the government is banned that machinery not to use.
Ban the product, yes.
Because the government has banned the product which that machinery will produce. So it means whether the future economic benefit is probable.
No.
The cost, whether the cost is measured reliably.
Yes. Yes.
Sir,
Whether
cost
that
can be measured.
machinery will be recognized as a PP.
No,
No,
sir. It has to be expensed.
It has to be expensed of. It cannot be recognized as a PP. So friends, now this machine can only be sold, and this machine can be sold at a scrap value or at a second-hand product. So the point is whether that machine, when that machine was ordered and purchased, whether intention was to get the future economic benefit through the scrap sale.
No.
No, sir.
The intention was to have a future economic benefit. The intention was to use that machinery for production for 20 year, 30 year, 15 year, right? The intent was not to use the machinery, not to buy the machinery for the purpose of sale. The intent was to use the machinery for the production, right?
Production.
So in this case, this machinery will not be recognized as a PP. It has to be expensed of. Whether it is meeting the definition of PP, tangible item held for use in the production, can be used for more than 1 year. Yes, when it was ordered, it probably was meeting the definition of more than 1 year, meeting the definition of PP. But when it was delivered at the point of initial recognition, it is not meeting the recognition criteria. Correct?
Yes, sir.
So, friends, I have covered two parts. I have covered the definition of PP and I have covered the recognition criteria at the time of initial recognition. Have you understood this recognition criteria also?
Very much.
So what are the two recognition criteria? Future economic benefit should be probable and cost can be measured reliably. Probable means more likely than not. There are more than 50% chances that yes, you will get the future economic benefit. Probable means high chances. Okay. Right?
Sir, what if
Yes.
सर अगर किसी एसिड की कॉस्ट कम है तब भी क्या वो पीपी रिकॉग्नाइज करेंगे?
अगर किसी एसेट की कॉस्ट
कम है, सपोज सर फैन है, वो उसकी कॉस्ट बहुत कम होती है, तब भी उसको पीपी की तरह रिकॉग्नाइज करेंगे?
पेन,
फैन, पंखा,
fan. Okay. Yes. See, it depends. You know, few companies, if you talk about accounting standard, answer is yes. Accounting standard Ind AS, answer is yes. Why? It's a tangible item held for use for administrative purposes and used for more than 1 year. Okay. Yes. But for the sake of convenience, you know, one of the biggest concept in accounting is materiality. सुना है आपने materiality का concept?
यस सर.
आप ऑडिट करने जाते हो, ऑडिट कैसे करते हो? आर यू ऑडिट? Can you please keep on mute? Can you please keep on mute? I think you are traveling. Yes. Yeah. So friends, when you go for accounting, are you doing accounting on 100? Are you doing auditing on 100% transaction or on a sampling basis? On a sampling basis, right?
Yes sir.
And you also see the materiality. For example, when you are checking the schedule and the schedule of expense, one of the expense, the value is let's say 20 lakhs and you have checked the evidences of let's say 19 lakh or 19.5 lakh, you will just leave 50,000 or 40,000, right? On the account of materiality. So friends, the companies also create the policy on materiality, and at times what they do on the basis of materiality threshold, like they make a policy that all the items individually costing 5,000 rupees or less, 50,000 rupees of less will be expensed in the year of incurrence itself, right? So as per that policy, you can expense off on the basis of materiality only. But if there is a very small organization, okay, their balance sheet is in thousands and they have purchased a fan of let's say 5,000 rupees, can that fan needs to be expensed off?
No sir.
No, because it will be a material item for them, right?
Okay, sir.
Clear? So as per standard, it has to be capitalized, but yes, on the materiality ground, the company can make a policy up to a certain threshold, and many companies are practically doing that. Listed companies are practically doing that. If they start capitalizing every small item, their fixed asset register will having a size of the road from Delhi to Mumbai. Right? So they have lakhs and crores of the PP. Correct? But yes, you have to see the PP from the lens of in your examination. If in this question will come into your exam, of course you need to capitalize. Okay? It's a tangible item held for
Okay, sir.
administrative purposes and used for more than 12 months. And yes, the cost is known and the future economic benefit is also probable. The fan does not have a life of less than 1 year. It has a life of more than 1 year. And when you purchase a fan, it will run for years and years. In my house, so one of the fan is more than 10 years old. Okay. Friends, now coming to the spare parts, standby equipment and servicing.
Sir, excuse me.
Yes.
Sir, we bought a machinery from China, and as soon as it got delivered to our plant, government just banned the product. But the ban is under litigation, or it is under consideration that it can be removed in future. So then the probable future economic benefit, it is questionable over there. Then what to do?
Yes. So if it is under litigation, right? And the company has high probability, right? Because the industry has put a case and the company has a high probability that the industry or the sector or the company will win the case, right? It means the future economic benefit is probable. So in that case, you have to capitalize that item as a PP and you have to check the impairment testing. You have to do the impairment testing, right? So once you have capitalized this item as a PP, means you have capitalized this machinery at 1 crore rupees. Now, what is the market value? Whenever the negative news come, you seen the stock market? Let's say there is a HDFC Bank has a price of 1900 rupees or 2000 rupees of stock price. If any negative news will come, whether that HDFC Bank share will become zero or it will have a downfall of 10%, 20%. And let's take an example of Ind AS Bank. Have you heard about the big accounting anomaly in Ind AS Bank in the recent time? Yes. So whether Ind AS Bank share becomes zero or it has a downfall drastically by 25-30%. It has a drastic downfall. Okay. It hasn't become zero. It means due to that negative announcement, due to that negative news, there is an impairment in the value. It hasn't become zero, right? So likewise, if it is probable that yes, future economic benefit will be received, the company will be able to enjoy the future economic benefit. The decision is under litigation. In that case, you will capitalize and you will also compare the recoverable value of that asset. Okay. We will also compare the recoverable value of the asset. And if the recoverable value is lower than 1 crore rupees in my example, lower than the carrying value, then you have to do the impairment. Okay.
Okay. Okay, sir.
What's your name?
Akshay.
Akshay. Okay. I thought. Yeah. I hope you have understood this, Akshay.
Yes, sir. Yes, sir.
Okay, very good. Now coming to the spare parts, standby equipments and servicing equipment. Have you guys went for an audit of any manufacturing plant?
Yes, sir.
Yes.
Yes, sir.
You must have seen in manufacturing plants, there are some spare parts in addition to the machinery and plant.
Yes, sir.
There are some standby equipment also in the typical example in your car. In your car, there is one Stepney. The fifth
Yes, sir.
tire. है ना? ये तो सबने देखा होगा ना fifth tire.
Yes, sir.
So what are these items? Spare parts, standby equipment and servicing equipment. So why that fifth tire is there in the car?
In case of emergency, we can use that.
In case of emergency, you can use that. It is acting like a standby equipment. So if your tire will deflated, if your tire will get punctured, then you will replace that puncture tire with the fifth tire in the Stepney. Okay. So now, what is the nature of this spare parts, standby equipment and servicing equipment? Standard says that these spare parts, standby equipment and servicing equipment will be recognized as a PPE if it is meeting the definition and criteria of PPE. Means, and when you went to the manufacturing plant, you will see some grease, lubricants, bearing, right? Oils. So whether this grease, lubricants, lubes, oils, whether, of course, these are kind of a servicing equipment, spare parts, these are consumables. So are they recognized as a PPE?
No, sir.
Why? Is it meeting a criteria of PPE, definition of PPE?
No, sir.
It is a tangible item. It is held for use in production because used in machinery, but it does not have a life of more than 12 months. It is a consumable. It is a consumable, right? So any spare part, standby equipment and servicing equipment, if it has a life of more than 12 months, means when you replace that part, and there are some, regular spare part also which needs to be changed or replaced at a regular interval. For example, there are some small spare parts which needs to be replaced after every week of production. So whether that spare part will be considered as a PPE?
No, sir.
Answer is it will be considered as an inventory. So standard says that the spare part, standby equipment and servicing equipment will be considered as a PPE, will be recognized as a PPE if it is meeting the definition and recognition criteria of PPE. Otherwise, it will be considered as an inventory. Otherwise, it will be considered as a inventory. Okay. Otherwise, it will be considered as an inventory. Is that clear? Is it clear or clear?
Yes, sir.
Clear, sir.
Clear. Okay. So friends, recognition of PPE we have covered. So definition of PPE we have covered. Recognition of PPE we have covered. Recognition of PPE, future economic benefit plus cost can be measured reliably. Okay. Spare parts, standby and servicing equipment accounted as a PPE if it meets the definition and recognition criteria of PPE. If not, it will be accounted as in what?
Inventory.
Inventory. Accounted as an inventory. Right? Okay. Very good. Now, friends, let's go to the next part. What is the next part? Subsequent cost. Initial cost at the time of initial measurement. Initial cost at the time of initial measurement. So we have seen the recognition criteria, future economic benefits should be probable and cost can be measured reliably. What about the subsequent cost? And what is meant by subsequent cost? What is meant by subsequent cost? For example, a truck. You have purchased a truck at a value of 25 lakh rupees. You have purchased a truck at a value of 25 lakh rupees. Okay. So whether the truck is a PP? Whether a truck is a PP?
Yes.
Yes, sir. Tangible item used for
It's a
supply.
tangible item. The company has purchased a truck for rupees 50 lakh, let's say 50 lakh rupees. For the purpose of transportation of goods, is this a PP? Answer is yes. PP account debit to bank. What accounting entry will pass? PP to bank being truck purchased. Okay. Now, what is meant by subsequent cost? Let's say, what kind of subsequent cost you will incur in the truck? What kind of subsequent cost? Service, maintenance service, day-to-day service and regular service, right? Day-to-day cleaning of the truck. So lubricants, oil, water, and yearly service also, annual service, regular service, depending on the running of the truck also, right? So subsequent cost, you have to incur day-to-day service as well as you have to incur the major replacement and overhauls also. Okay. For example, the company has, after 10 years, the company has to replace an engine because the truck met with an accident. There was a major problem in the truck and the engine needs to be replaced. The life of the truck is, let's say, 20 years. But now, after 10 years, the engine needs to be replaced. So whether it is a kind of a day-to-day service, is it a regular service, or is it a major
Yes,
cost?
sir.
It's a
Major
major
cost.
cost. It's a major cost. So this standard talks about the treatment of the initial cost and initial measurement, and it also talks about the subsequent cost. It also talks about the subsequent cost. So what is the treatment of subsequent cost? So standard says that, for example, day-to-day service or regular service. What is your view? Day-to-day service or regular service? Whether it has to be capitalized or it has to be charged off to the P&L.
It should be
It has to be expensed.
Yeah?
Expensed off, sir.
Expensed off. It has to be expensed off. So regular service of the truck, for example, change of engine oil, air filter, oil filter, etc. Right? Regular service, for example, change of air filter, oil filter, okay, and change of engine oil, etc. Okay, so whether it has to be capitalized or charged off to the P&L, it has to be charged off to the P&L. Second, major replacement or overhauls. Major replacement or overhauls. Major replacement. Oblique overhauls. For example, replacement of engine after 10 years. Replacement of engine after 10 years. Right? These two are the kind of a subsequent cost. Do you agree or disagree with me? Or agree to disagree?
Agreed, sir.
I'm not seeing many students who are writing on the chat box. Students, can you please get engaged? Can you please write on the chat box also? Chitra, I haven't seen that you are writing on the chat box even. You are very interactive and engaging, but today you are not engaging. Bibhu, Manish, Sanjay, Udandam, Nitish, Naman, please write on the chat box also. When I ask question, so don't unmute yourself, but at least write on the chat box, yes sir, understood, okay, right. Please write, okay?
Sir, I am speaking and but writing.
Okay,
I
no
am
problem.
not
If
able-
there is a challenge, then no problem. But my key message is please try to engage in the class.
Yes,
Okay,
yes, sir.
that's the key message. Okay, now coming to this thing. Friends, for initial cost, the recognition criteria was, what was the recognition criteria for initial cost? What was the recognition criteria for initial cost?
that the future
Recognition
economic
criteria क्या
benefits
था?
will flow to the entity and cost can be measured reliably.
Reliably.
Yes. So recognition criteria was future economic benefits should be probable and cost can be measured reliably. This was the recognition criteria. Future economic benefit plus cost
Can be measured reliably.
measured. Okay. Friends, standard says that for the subsequent cost, right, the same criteria needs to be seen. If this criteria is fulfilling, then that item has to be capitalized as a fixed asset. Then item has to be capitalized as a PP. Subsequent cost. Friends, in day-to-day service or regular service, is this meeting the recognition criteria of future economic benefit plus cost can be measured reliably? Is this meeting?
Yes.
Yes, it is meeting. If you will not service your car, will you be able to run the car? If you will not
No,
service?
no.
If you will not service your machinery, will you be able to get the production from your machinery for a longer period of time? No, sir. No. Even your body also needs servicing now. If you will not rest in night, will you be able to perform in the morning?
No, sir. Sleepy.
No. You will feel sleepy. You will feel lazy. Your body will be lethargic. Okay. So friends, this day-to-day service or regular service, of course, cost is known because you know what cost you are going to incur. So this cost is hardly a criteria. Believe me, in the practical world, in the real life, in the practical world, this cost is known, right? The only thing is whether future economic benefit will be received for a longer period of time or not. The only thing is that. So now this day-to-day regular service or day-to-day service, this is also meeting the recognition criteria. Major replacement or overhauls, the engine has been replaced. So whether this will also meet the recognition criteria?
Yes.
If engine
Yes, sir.
would not have been replaced, you will not be able to run the truck on the roads. Yes.
Yes.
So if both are meeting the recognition criteria, but should we capitalize? Should we capitalize this day-to-day servicing cost?
No, sir.
No, sir.
Standard says that no. Standard says that only major replacement, major inspection, major overhaul cost needs to be capitalized. Day-to-day or regular servicing cost need not to be capitalized, right? So it has to be charged off to the P&L. Charged to P&L. What about this major replacement and overhauls? It has to be capitalized as a part of PPE. Capitalized as a PPE. Sir, don't you think when truck was purchased, it came with an engine? And now when you are replacing engine, so you are adding one more engine to the truck, right? So how we should do this? Correct. So let me explain you with the help of an example. So friends, very good example, great example, and this example will give you the entire clarity. The company has purchased a truck for rupees 50 lakhs for the purpose of transportation of goods on 1st April 2014. The engine got damaged and required replacement. Hence, the company has spent 20 lakhs on the replacement of the engine as on 1st April 2024. After how many years?
10 years.
After 10 years. Okay. After 10 years. Yes. So the life of the truck is 20 years. Discount rate is 10%. Advise how the initial cost and subsequent cost can be accounted for in accordance with Ind AS 16. Please help me. How this initial cost and subsequent cost will be accounted for? Can you please help me? So let me do the initial cost accounting, initial measurement accounting. Let me do initial measurement. What is my initial measurement on 1st April 2014? What is the accounting entry on 1st April 2014?
PP
Truck to
account,
bank.
bank account 50 lakhs.
Truck
To
PP
bank,
account
50
debit,
lakh.
To bank.
debit to bank.
Bank. 50 lakhs.
$50 lakhs. Okay. What is the next entry every year? What is the next entry at every year end?
Depreciation to
Depreciation.
truck.
Depreciation.
To accumulated depreciation.
What is the life of the truck?
20 years.
20 years.
20 years. What is the cost of the truck?
50 lakhs.
What is the per annum depreciation?
2.5 lakhs.
2.5 lakh. What is the accounting entry?
Depreciation account to accumulated depreciation account.
Depreciation account debit to accumulated depreciation. Right? To accumulated depreciation account. To accumulated depreciation. What is the amount? 50 divided by 20.
2.5.
2.5. This is the accounting entry, right? So my depreciation per annum is 2.5 lakh. Everybody is clear on this depreciation per annum?
Yes, sir.
Yes.
Right?
Yes.
So friends, every year and I'll do this. Now the time has come, 1st April 2024 has Okay. So what to do now? We have spent 20 lakh rupees. क्या करें? क्या करें? What to do?
Truck to bank.
Sorry?
Truck account debit to bank.
Truck account debit to bank.
Debit to bank.
PP to bank.
So you are saying you need to capitalize this engine, right?
Yeah.
Yes.
Engine account to bank account 20 lakhs.
Yes, engine account to bank account. So it's a component of the truck only, and we are following component accounting. And yes, so it has to be capitalized. But don't you think you are capitalizing two trucks? You are capitalizing two engine in one truck?
Yes, sir. We need to de-recognize the old engine.
First engine.
Yes, very good. You need to de-recognize the old engine. Now I got my answer. So
And
in
sir,
the books, see,
value is not
see,
us, we will discount it.
yeah, see, in your real life and in your books of accounts, things will look same. If you will not de-recognize your first engine, in your books of accounts, when you have capitalized your truck 50 lakh rupees, it came with an engine. When you recapitalize new engine, now in your books of accounts, this truck will having two engine, but in reality, this truck will only have one engine, and only the new engine is giving you the future economic benefit. The old engine is damaged and it is not giving you future economic benefit. So friends, we need to de-recognize old engine and we need to recognize new engine because it's a major replacement, major overhaul, major maintenance. Okay, we need to de-recognize old engine. We need to recapitalize new engine. Whether everybody is clear on this? How
Yes,
we
Yes,
will
clear,
do
sir.
that? How we'll do
Clear.
this? We'll tell you. Now the question comes, sir, when I purchase my truck, I got an invoice and that invoice has a total value of the truck. There was no bifurcation that this is the value of the truck, this is the value of the engine, right? So how will I arrive at the value of the engine? How will I arrive at that what is the value I am going to decapitalize, I am going to de-recognize? Are you getting me? मैं किस value को de-recognize करूं?
So we will engage a valuer.
Sir, we will discount the current 20 lakhs and less depreciation
So
for 10
friends,
years.
Sir, we have to the 20 lakhs, the discount as the present value of the now. Then we have to depreciate until 10 years. Then we have to de-recognize that.
friends, standard says that, yes, standard says that in case of major replacement or overhauls, new cost of component needs to be capitalized and old component needs to be decapitalized, de-recognized. This is what you guys told me, yes? And I agree with you. Now, if old component cost value is not known, then the current component cost needs to be taken to arrive at the cost of the new component. हम पुराने कंपोनेंट की कॉस्ट कैसे निकालेंगे? नए कंपोनेंट से हम पुराने कंपोनेंट की कॉस्ट निकालेंगे, राइट? So friends, in this case, on 1st April 2024, there is a replacement of engine, right? Now, what is the concept for replacement of engine? What is the concept of replacement of engine? Concept in case of replacement. What is the concept? So concept says that in case of major replacement or overhauls, new cost of component needs to be capitalized and old component cost needs to be decapitalized. And old needs to be de-recognized, decapitalized. Okay. Yes. Friends, have you got the material of Ind AS 115? Whether it is uploaded?
Not checked, sir. I will check and let you know, sir, now.
Okay. if old component cost value is not known, then the current component cost needs to be taken. Current component cost needs to be taken to arrive at the cost of the new component. So current component cost needs to be taken to arrive at the cost of the old component, right? To arrive at the cost of the old component, right? Now, how to arrive that? So let's discuss this. Friends, when this is happening on 1st April 24. After how many years?
10 years.
10 years. Okay. So, cost of engine at 1st April 2014. How to arrive at this cost of engine? So I am sitting on 1st April 24, and after 10 years, I am computing the cost which was incurred 10 years ago. Okay? Because I know today's cost. So if I know today's cost, how can I arrive at the 10 year before cost? Neha, how will I arrive that? By discounting, by computing the present value of the current cost, right? By doing the discounting, by computing the present value, right? By discounting. Okay. So what is my cost of engine as at 1st April 2014? It is the present value of current cost on the date of original purchase. It is the present value. Cost of engine as at 1st April 2014 is equal to present value of current cost. Present value of current cost of new engine on the date of purchase of old engine. Means I need to discount my today's cost by 10 years back. So what is my cost of new engine, friends? What is my current engine cost?
20
What
lakhs.
is my current engine cost?
20 lakhs.
20 lakhs.
My current engine cost is 20 lakhs. 1, 2, 3, 4, 5. 20 lakhs. Okay. Now, how to arrive at a new old engine cost? Present value. What is the present value factor?
10%.
10%.
So what is my present value factor? My present value factor is equal to 1 plus 10% to the power 10. I need to arrive at a 10 years ago. So what is my present value factor? My present value factor is 2.594. So what is my current cost of, estimated cost of old engine on the basis of present value? What is my estimated cost? Estimated cost of old engine.
7,71,087. I think.
This multiply by this.
594.
Sorry, this divide by this. This not multiply, this divide by this. 7,71,000 and 87, right? This is your current cost of old engine. Friends, you have arrived at current cost of old engine as of today. Means on 1st April 24, you have arrived at the cost of the old engine as on 1st April 2014, right? So is it the today's value of the old engine for the purpose of derecognition?
Yes.
No, sir, we have to less depreciation from this.
Yes. ये वैल्यू आपने कब की निकाली है? आज की वैल्यू तो 20 लाख रुपए है. Today's value of the engine is 20 lakh rupee. Yes. So this is not the carrying value for derecognition. This is the value as on 1st April 2014. You need to derecognize on 1st April 24. So you need to compute depreciation also. Now let's do the depreciation accounting. But in the last 10 years, you have already charged depreciation. In the last 10 years, you have already charged depreciation in the last 10 years, right? So friends, Now let's compute the WDV. Calculation of WDV as at 1st April 2024. Calculation of WDV as at 1st April 2024. Or let's write 31st March 2024, right? Because every year end you are charging depreciation. 31st March 2024. Friends, what is my WDV of truck as on 31st March 24? WDV of truck.
25 lakh.
25 lakhs.
What was my gross block? What was my gross block? My
Gross block
gross
is
block was
50 lakhs.
50 lakh is my gross block, right? 50 lakh. 1, 2, 3, 4, 5. 50 lakh. And what is my accumulated depreciation for 10 years?
25 lakhs.
25 lakhs.
Accumulated depreciation for 10 years. $2,50,000 multiply by 10. 25 lakh, right? Net block. Is 25 lakh. Net block is 25 lakh, right? But now, for arriving at the carrying value of engine, I have to split this truck into engine and the other than engine. Yes or no? So
Yes,
now, truck. This is my gross block. Accumulated depreciation and net block. Right? WDV as at 31st March 24, I need to arrive at. So my engine, I have estimated value of my engine as on 1st April 24. What is the value? 771087. So truck other than engine, two component I have bifurcated. One engine and the entire truck other than engine.
7787 minus 50 lakh.
77 minus this thing 50 lakh minus 771087. What is the gross block of the truck? 50 lakh, right? What is my accumulated depreciation for 10 years? I have splitted this. What is my accumulated depreciation for 10 years?
25 lakhs.
25 lakh. So how this 25 lakh will be splitted? So up to 10 year, up to 31st March 24, whatever was the value of the truck, what you have done? You have done the cost divided by 20 multiply by 10, right?
Yes, sir.
यही किया है ना आपने?
Yes, sir.
आपने उसका per annum depreciation कैसे निकाला है?
Straight
Divide
line.
by 20?
Divide by.
Simple. The per annum yearly depreciation is divided by 20. Shall I do the same thing? Because I cannot change the past. I can split the past, but I cannot change the past. मैंने value split की है खाली. So what should I do? This divide by 20 multiply by 10. Right? Are you guys agree with me or disagree with me? Am I doing the
Agreed,
right
sir.
calculation? What should be
Agreed,
the
sir.
total? इसका total क्या होना चाहिए?
25.
25 lakhs.
lakh. See
25
whether
lakhs.
total is 25 lakh or not. Yes, it is 25 lakh. So have I done the right calculation? Yes. Any doubt?
No, sir.
Any doubt? Now what is the net block? What is the net block as on 31st March 2024? What is my net block? My net block is 25 lakh. Correct? And it is telling also. Right? Friends, now what is the accounting entry at the time of replacement? What is the accounting entry on replacement? Tell me. What is the accounting entry on replacement?
New engine account debit to old engine
Accounting
account.
accounting entry on replacement. Accounting entry on replacement is on 1st April 2024, new engine, PP account debit to bank. New engine, PP truck account debit to bank. What is the value? What is the value of new engine? The value is 20 lakhs, na?
20
The
lakhs.
value of new engine is 20 lakh, na? You have paid 20 lakh rupees, right?
Yes, sir.
Being new engine capitalized in truck. Being new engine capitalized in truck. Okay. Now what is the next entry? What is the next entry?
De-recognize the old engine.
De-recognition of old engine. So this was recognition of new engine. So this was recognition of new engine. This entry was recognition new engine. And now de-recognition of old engine. De-recognition of old engine. What is the accounting entry for de-recognition of old engine?
Bank account debit to
Sir,
Bank
old
account?
engine.
sir, credit to old engine, the old engine, debit to loss on replacement.
Loss on replacement, right? Because you haven't
You can
received
sell
anything. You
Yes.
haven't received anything. Loss on replacement account debit. Account debit in the P&L to old engine. To old engine PP. PP. To old engine PP credit. Okay. And what is the amount? 385,543. 385,543. Alternatively, what is the accounting entry alternatively? Alternatively, because few may ask, sir, will you not reverse gross block? Will you not reverse net block accumulated depreciation? Yes. Alternatively, the account accumulated depreciation account debit by how much?
3,85,543.
Accumulated depreciation account debit by 385,543, right? Gross block credit to old engine gross block credit कितने से? By what amount? 771087. Loss on replacement account debit. By what amount? Differential. This minus this. Is that clear? Assuming 2 lakh rupees, 2 lakh has been received on account of sale of old engine as scrap. What is the accounting entry? What is the
Then we
accounting
will-
entry?
We'll debit the bank account and reduce to the loss.
Yes, in that case, what is the accounting entry? Yes, exactly. Bank account debit. Bank account debit. How much? भाई फटाफट बताओ ना, बैंक अकाउंट डेबिट कितने से होगा?
2 lakhs.
2 lakh rupees. 2 lakh rupees. ओल्ड इंजन क्रेडिट कितने से? 385.
385
Netted 385 ना?
Yes, sir.
385. What is the loss?
185
185, 553.
Differential. This minus this. 185. So have you understood this all entry recognition, derecognition, how to compute the old value, how to split the value, how to depreciate? Have you understood, not understood?
Understood, sir.
Understood.
Understood. So what is my revise? What is my revised gross block? What is my revised gross block and net block on 1st April 24? Now, my revise gross block and net block, my revise gross block and net block on 1st April 2024. What is my revised gross block and net block? So again,
41 lakhs 2057.
Truck engine other than engine. Now old engine is decapitalized. Now what is the value of the new engine? 20 lakh. आपने अभी कैपिटलाइज किया ना 20 lakh.
Yes, sir.
Yes. What is the accumulated depreciation on 1st April? 0. आज ही तो परचेज किया है. 1st April 24. What is the net block? This minus
20 lakhs.
Yes. And what about other than engine? 40 to 28. What is the accumulated depreciation? 2114. What is the net block? This much. Right? Are you happy with the calculation or unhappy with the calculation?
Happy with calculation, sir.
Happy with the calculation? Okay.
Yes, sir. Happy.
So just a minute. Okay, this should be plus. Right? This is your revised gross block and net block as on 1st April 24. This is how you need to do all the accounting, calculation and accounting entry. This is a complete package of your capitalization of subsequent cost, right? If this cost would have been determined in the beginning itself, for example, if the vendor has given me invoice, let's say 40 lakh rupees truck, 10 lakh rupee engine, then of course, from the day one, we used to adopt the component accounting from the day one, right? From the day one, in our fixed asset register, the total value of the truck has been shown as a 50 lakh, but there are sub-component to the truck, engine value, other than engine value, right? Other than engine value is just like a remainder, just like a balance. Okay. Very good. Yes. So friends, the standard says that major replacement cost, major overhaul cost, major inspection cost, that is going to be capitalized as a part of the property, plant and equipment, right? That is going to be capitalized as a part of the property, plant and equipment, right? This is what standard says. This is what standard says. Okay. And if there is a regular day-to-day cost, servicing cost, maintenance cost, it is not going to be capitalized, right? And just think from that perspective also, those costs will not sustain for more than 1 year. Are you getting me? Means these day-to-day servicing, small servicing, these have a life of almost 1 year or less than 1 year. Okay. Clear?
Yes, sir.
Is that clear?
Yes, sir.
Okay.
Sorry, in the real life, the 20 lakhs we will not know at the initial time. Then how we will book these? Say after 10 years only we know exactly what it is. On the 10th year we will do all this recalculation and book accordingly. What about the previous year accounting, sir?
So in the previous year, whatever you have done, you have done. No change is required the previous year. On 1st April 24, you have to copy this Excel file.
Okay, sir.
You have to copy this Excel file. And you know, so I am academician by heart and I am an industry person from my mind. Right? So teaching is my passion. Okay. But I'm working in an industry. So these all calculations are happening in the real life as well as in the exam also. Right? So this is how this calculation has to happen. तभी तो discounting किया ना Saminathan, since we were not aware that what is the breakup on the day one. So all these calculations I am doing sitting on 1st April 24. And that is why I have computed my estimated cost on 1st April 2014, 10 years back, just to arrive at my WDV of this engine which is going to be derecognized. The total value has not changed. See, even when I computed this WDV of truck, so this calculation was in my last 10 years. But when I computed again on 1st April 24, after doing the splitting, my gross block is 50 lakh. My accumulated dep is 25 lakh. My net block is 25 lakh. Nothing has been changed in terms of calculation. Nothing has been changed. What has changed? What has
So
changed?
only the percentage, nomenclature is changed.
Yes, only the split has changed, right? The past calculation has not changed. But going forward, now when you replaced, now you know the value because you have purchased. So now your fixed asset register from 1st April 24, your fixed asset register will show the breakup of engine and other than engine, right? Because you have purchased that and you have a remaining life of 10 years. And this engine, you are going to depreciate over the remaining life of 10 years, right? Because engine cannot run on the road. Engine alone cannot run on the road. Engine with truck can run on the roads, right? So if the
Right,
component, if the component which is going to be replaced, it is going to be depreciated over the remaining life of the principal asset. And what is the total life of the asset?
20 years, remaining 10 years.
Remaining 10 years, right? You purchase a car and the life of the petrol car is 15 years. The life of the diesel car is 10 years. And if you will run beyond that on the roads, if the traffic police will see the RC registration certificate and they know that the life of the car is expired while car is roadworthy, you are able to run the car. And I have seen in the small villages, this Maruti 800 is still running on the roads, 30-year-old. Right?
Yes, sir.
What they do?
Ambassador.
Yes, Ambassador, Maruti 800, they just do jugaad. They do small servicing, repair, they push the car is running. But the actual life is only 15-20 years as per the registration certificate. The police will confiscate your car. The police will forfeit your car. Right? So the point is whatever money you have invested in your car at the end of 13 year, the life is going to be expired in the 15 year. So whatever you will capitalize, that capitalized portion will be depreciated over the remaining life of 2 year only. Right? Not the again 15 year. Okay.
So thank you so much, sir. You have explained in detail. I really appreciate it, sir.
Yeah.
Sir, but if we have gotten a new engine, it should be for 20 years, na? Basically.
So what's your name? What's your name?
Bibu, sir.
Bibu. When after 20 years, when you sell that truck, so will you sell the truck separately or will you sell the truck as a whole? As a whole, complete truck. That is number one. Number two, if you wanted to sell this truck as a scrap and that part is replaceable, means you will use that part standalone. You will use that part independently. Okay. For example, that engine is kind of a universal engine and you can use that engine in your machinery also. Right? And if that part, that component has a multi-purpose use and it can be used independently also, in that case, that part can be depreciated over the independent life of that part. Right? Otherwise, it has to be depreciated over the remaining life of the principal asset in which that part is going to be built. Correct?
Yes, sir.
Right? So in your exam, if the question will come in your exam and just to confuse you, they have given that the life of the engine is also 20 years. So don't depreciate in 20 years and write an assumption that the engine is part of the truck, right? And this engine has to be depreciated over the remaining life of the truck, which is the principal asset. Okay?
Okay.
So friends, now the time for break. So let's have a break. It's 8:30.
Excuse me, sir. I
Sorry?
would like to ask a question.
Yeah, please.
Sir, this truck belongs to Mr. Jain.
Okay.
The tires of these trucks are required to be changed every 3 months.
Okay.
Mr. Jain is a smart person. He buys tires for 3 years of span. That means for 12 quarters.
Okay.
So in year one, the tires which are required in year one, they can be charged as regular consumables. What about the years what about the tires we have brought for second year and third year? Should we recognize it in PPE or as an inventory?
Inventory. Is it whether those tires are meeting the definition of PPE? So when you are looking at the definition of PPE, so you are looking from the use perspective. Okay. For example, I bought my mobile phone. I'm just taking an example. And it says that from whenever you start doing the use, so from whenever you start using the asset, the life is 2 years. Okay. So I purchased my mobile phone today with an intention that I'll start using after 5 years. So will I say that my life of the mobile phone is 7 years? No.
No.
So what I
No.
have done, I have just, doing a kind of a, I am keeping a stock of it. I'm not using it. Right. So the
Yes.
point is, when you're looking at the life now, so you're looking at the life from the perspective of the use, from the perspective of the
Okay.
productivity. So you purchase the tire, life is 3 months only for the tire. So life has to be seen from the either use or at times कार आपकी खड़ी भी है तो भी उसकी लाइफ खत्म हो रही है. Correct? So the point is you need to see the life from that perspective. You don't need to see the life from the perspective of if I purchased the goods which I am going to be used after 8 years, 10 years, 3 years. So it will be capitalized. Answer is no. Right? It has to be seen from that perspective. Okay.
Okay. Okay.
Friends, it's 8:37 now. So let's have a break for 13 minutes and we will start at 8:50. Okay. Ashok ji, break start. So friends, we discussed the concept of, capitalization of subsequent cost. And we discussed that if in case we are capitalizing the major maintenance, major replacement, overhauls, major inspection cost, then we need to decapitalize the old component cost, right? We need to decapitalize that. Now let's understand another example on the major inspection as well. So friends, let's say the example of major inspection example. Jet Airways Limited purchased an aircraft for ₹1 crore. The life of the aircraft is 20 years. As per DGCA rules, the aircraft has to be undergone with the major inspection every 5 years, right? And such inspection cost is 15 lakh. Suggest the component accounting under Ind AS 16. Suggest the accounting of initial cost and subsequent cost. Friends, tell me what should be the accounting. बताओ क्या करना है. Please advise the accounting for initial cost and subsequent cost.
Sir, initial cost will be the carrying amount, and subsequent cost also will become the carrying amount of the asset. That is PP.
Okay. Yeah. But what about the component accounting? So basically, when on the day one you purchase the aircraft, what is the accounting? On the day one with this company has purchased the aircraft, what is the accounting entry?
Aircraft to bank.
Aircraft to bank, aircraft PPE to bank, right? Property, plant and equipment to bank. Whether this aircraft and the life of the aircraft is 20 years. So what should be the depreciation? What should be the depreciation?
4 lakhs. 40 crore. 40 lakhs. 40 lakhs.
How much? So are you dividing 1 crore divided by 20? Are you doing that?
It's a 5 lakhs, sir, per annum.
Paid inspection cost also.
Friends,
I did 5 years. So for 20 years, yes.
5 into 4, 20 lakhs.
5
friends,
lakhs.
tell me one thing. I don't know why different numbers you guys are telling. So 1 crore divided by 20, right? If you 1 crore, if you will divide
5 lakhs.
1 crore divided by 20, it will come 5 lakh. But whether 5 lakh is the right answer, answer is no. Friends, just tell me one thing. In the industry like aviation industry, okay, like the ship industry, aviation industry, in these kind of industries, this inspection cost is a major cost, major maintenance, major inspection. It is not a small cost. It is not like a vehicle that its inspection cost is 10,000 rupees, 20,000 rupees. No, these are the major inspection cost. These are the big costs. Okay. So friends, if I talk about these big costs, so this major inspection cost has to be capitalized at the time of every inspection. Can you please keep on mute? Somebody has unmuted and the noise is coming. Can you please keep on mute? Yes. So friends, in these kind of industries, where major inspection is part and parcel of the life. In case of aircraft, if it is flying, if it is fly worthy, air worthy, it is flying fit and fine. But there are the major inspections which are happening at a scheduled time. Okay. For example, the aircraft has to undergo with a major inspection as per DGCA rules in every 5 years. Doesn't matter. There is no any problem in the aircraft. It is running fine. But if 5-year time frame has been elapsed, it has to undergo with a major inspection, which will huge amount of inspection. It will also a time consuming and the cost consuming exercise. Okay. So friends, in those kind of, in these kind of items, in these kind of situations, these major inspections are going to be capitalized. So after 5 years, this entity has to undergo a major inspection, which is after 5 years, right? So if this major inspection is going to be capitalized, don't you think the current inspection, the aircraft which this entity has purchased, it is already inspected? Yeah?
Yes,
It is already
sir.
inspected now. So don't you think this aircraft has also built some major inspection cost within, right? The manufacturer also has to get the aircraft inspected from DGCA. He also has to pay some fees to the DGCA, 15 lakh rupees, because it is given that such inspection cost is 15 lakh rupees, right? So don't you think that inspection cost has to be capitalized separately as a component? Yeah. So if I will split this aircraft, gross block, accumulated depreciation, and net block, right? What is my component of aircraft? Inspection component and other than inspection component. So this will also be a major component, right? And other than inspection, right? Means aircraft. I can say aircraft other than inspection. Okay. So what is the gross block of inspection component? 15 lakh. It is given as such inspection cost is 15 lakh.
15
right?
lakh.
15 lakh. इसने आपको 5 साल के बाद की कॉस्ट नहीं दी, इसने ये बोला इसकी कॉस्ट 15 लाख है. So what is the remainder cost? What is the aircraft cost? 85 lakh. What is the total cost? 1 crore.
1 crore.
What is the depreciation? This
For 15, it's 5 years.
Yes, very good. Life. So life of the inspection component is 5 years. Life of the aircraft is 20 years. Okay. Okay, very good. Because after every 5 years, again you have to undergo with a major inspection. Divide by 5 into this is the per annum depreciation. This is the per annum depreciation. So what is the accumulated depreciation after 5 years? Let's say accumulated depreciation after 5 years. What is the accumulated depreciation? This multiply by 5. This multiply by 5. So what is your net block? This minus this. You can see your net block has become 0. Your net block has become 0 for the inspection component. For the inspection component. I hope it is clear to all of you. Yes or no? Is it clear to all of you?
Yes, sir. Clear, sir.
Very much clear?
Very much, sir.
Okay.
Sir,
Great. Yes.
Sir, for example, now after 5 years, we have done inspection and it cost 20 lakh. Then we will add 20 lakh and then do depreciation as per 5 years.
So let me complete your wish list also. Okay. So let's assuming at the end of 5th year, the company has actually incurred a major inspection cost of rupees 20 lakhs, right? This is what you want. Advise the gross block and net block at the end of 5th year. 5th year after this inspection. Fine, sir?
Yes.
Revise gross block and net block, GB and NB. Okay, revise GB and NB. So what is the value of my inspection component? 20 lakh?
20.
Right? Accumulated depreciation 0. ये नया कंपोनेंट है ना, पुराने वाला तो खत्म हो गया.
Yes, sir.
Right? And the aircraft other than engine 85 lakh. Accumulated depreciation 5 years, this much and this much, right? So your total gross block will revise to 1 crore 5 lakh. Okay. Right. Shall I show you the Interglobe Aviation Indigo Airline annual report, where this major inspection cost is also part of, major inspection cost is also part of your PP in the property, plant and equipment useful life. The major inspection cost is also given separately. Shall I show that?
Yes, sir.
Would you like to see that? Okay. So let me allow a minute and let me open the annual report of Indigo Airlines. Okay. Annual report of Interglobe Aviation Limited. Just allow me a minute and I'm opening the annual report. Just a minute. Yes. I hope Indigo Airline annual report is visible.
Yes, sir. It's
Is
visible.
it visible? Okay. Yes. You guys must be wondering how this inspection component, how it can be a, how it can be a PP. Can you see this? Aircraft and engine, owned aircraft and spare engine. Aircraft and engine component including spare engine, useful life 20 years. Major inspection and overall cost 2 to 13 years. Can you see this? So what is getting inspected? Aircraft is getting inspected. Inspection किसका होगा? Aircraft का होगा ना? Life of the aircraft is 20 years. It is given. But this life of inspection and overall cost, it is part of your aircraft and spare engine. The life of this inspection and overall cost is 2 to 13 years for different kind of aircraft, for different stage of, kind of inspection. Have you seen that? आपको विश्वास हो गया जो लिखा है स्टैंडर्ड में वो रियल लाइफ में भी है?
Yes, sir.
Yes. So this is the balance sheet of the largest airline company of India. You know what is the size of the balance sheet? Let me show you the size of the balance sheet. What is the size of the balance sheet? The size of the balance sheet is how much? 1159,139 million, means 1,15,913 crores. More than 1 lakh crore balance sheet size. Okay. Okay, friends, now let's go to the Excel file also. So we have understood the concept of component accounting. We have understood the concept of recognition of subsequent cost. We have understood that subsequent cost in terms of major inspection, major replacement, major overhaul is going to be capitalized. Is that clear to everyone? Is it clear or clear?
Yes, sir. I have one question, sir, on this. So actually the inspection cost, so initially we know that the 15 lakhs is the inspection cost. That is very much sure. But the end of the 5th year only we came to know that it's a 20 lakhs. But 15 lakhs, whatever the auction we did is correct. What about the 5 lakhs, sir?
Which 5 lakh?
See, actually, in original example, we given that 15 lakhs is the inspection cost that we are depreciating over a period of 5 years. That is very much understood. There is no question about that.
And it becomes zero.
Zero. But assuming that the end of the 5th year, the expensive inspection cost is come to 20 lakhs. In that case, that 15 lakhs treatment is okay. That 5 lakh treatment, I feel that there is not. So what we have done in the earlier case, we have that discounting the that, and accordingly we have done it, right?
Yes.
So we do not know what the 5 lakhs expenses we will incur later, but we on the initial date of inspection date.
See, there are two aspects in it, right? So where you are getting confused, because you are thinking that 5 lakh has been paid additional for extra work, right? It is not for extra work. The inspection cost becoming expensive now. The regulator has increased the fee. The inspection cost has become expensive. Okay. So the origin, when I'm talking about the discounting, when you have to do the discounting, so you have to do the discounting to arrive at the estimated cost. Again, if I would have got the invoice, or if I would have got the fair value of the engine at that point of time, probably the fair value would not have been 7,71,000. No, the fair value would have been something else, right? But since I'm not aware about the cost on the day one, that what was the cost of the engine, so standard has given me some indicative criteria. And standard says that if you're not aware about the actual cost, you can use the surrogated cost. You know, the word which standard is using is like a surrogated cost, right? So this is not the actual. So if you will say that, sir, we have spent 20 lakh rupees on engine and we have done the discounting, and 771 we have taken as a original cost of the old engine, right? So that is not right. That is not right. That is not the actual cost at that point of time. That is the indicative cost. Okay. But in this question, when this aircraft was purchased, such inspection cost was 15 lakh rupees, right? But after 5 years, it become expensive. 15 becomes 20 now. So now you have to capitalize. So you have to capitalize 20 and you have to depreciate over the remaining life of 5 years. As simple as that, right? So it will go like that only. It will go in the after, even after 5 years, let's say. So the life of the aircraft is 20 years. After 5 years, 10 years have completed. Again, you have to go through the inspection. Let's say it become 30 lakh. Then you have to capitalize 30 lakh, depreciate over a period of 5 years, which is again 30 will become depreciated in the next 5 years. Let's say after 5 years, means 15 years have completed. Now 5 years are left, right? So now your inspection cost become 40 lakh. So now you have to capitalize 40 lakh, depreciate over a period of 5 years. Okay, 20 years are over. Now let's say you will scrap the aircraft, you will sell the aircraft, or whatever you will do. Okay, so this is how this accounting has to happen. Right? So whatever you are incurring as a major inspection, major replacement, or major overall cost, that you need to capitalize and depreciate over the life where you are expecting the future economic benefit, right? So this inspection cost which you are incurring will give you future economic benefit only for the next 5 years, not beyond that, right? That is why you are applying the component accounting. What is a component? The component are those parts which has a significant value and has a different useful life. Correct? That's how you depreciate.
Sorry,
Right, sir. Right, sir. Actually, I initially I understood like that the 15 lakhs is become the 20 lakhs. So now that 15 lakhs is concept is over. We recognize that full stop. Then next 5 years, the 20 lakhs concept is coming. We are depreciating over period. Now I am very much clear, sir. Thank you so much for your explanation.
So let's say what happened even in case of a truck, Saminathan. So after 10-year engine got damaged and the truck was purchased at 50 lakh in the day one, right? 10 years back. Now let's say truck becomes so expensive due to the taxes, duties. Now the real value of the truck is, let's say, 1 crore today, assuming. And the engine value is 50 lakh rupees, right? So you will say that, sir, we have purchased a truck in 50 lakh rupees. And now you are saying new engine costing 50 lakh rupee, right? So again, you are not aware about the cost of the engine at that point of time. That is why you are discounting 50 lakh for last 10 years. Okay. So this is an indicative criteria that estimated number is not an actual number. That is why we are saying it's an estimated cost. Okay.
सर ये जो 15 लाख है वो आफ्टर 5 ईयर इनकर होगा ना?
नहीं, अगर आपके क्वेश्चन में कुछ नहीं लिखा, कहते हैं इंस्पेक्शन कॉस्ट 15 लाख है, तो ये जो 15 लाख आपका जब डे वन पे आपने परचेज किया तो वो तो ऑलरेडी इंस्पेक्शन होके आया ना.
ओके सर।
आप जब गाड़ी परचेज करते हो तो डे वन पे परचेज करते ही सर्विस कराते हो क्या? नहीं कराते ना, 1 साल के बाद कराते हो, क्योंकि वो सर्विस्ड होती है ऑलरेडी, राइट? पार्ट्स नए होते हैं, सर्विस्ड होती है। आप जब कार खरीदते हो तो कार में फिटनेस का सर्टिफिकेट आता है ना, पॉल्यूशन सर्टिफिकेट, फिटनेस सर्टिफिकेट। आप कार खरीदते हो, उसका पॉल्यूशन कराते हो चेक? नहीं,
नो सर, मतलब
बाद में
आफ्टर
करा,
1 ईयर।
बाद में कराते हो। क्यों? उसका पॉल्यूशन ऑलरेडी हुआ होता है, ऐसा नहीं कि होता नहीं है, ऑलरेडी उसका पॉल्यूशन चेक होता है, right? So likewise, because these examples are very small example and these examples are related to your real life, so that you can understand. But when you purchase an aircraft, aircraft cost is millions and billions, करोड़ों का होता है। उनकी जो इंस्पेक्शन कॉस्ट होती है वो भी करोड़ों में होती है, right? It's not a small cost, it's in crores, right? So in that case, when aircraft came, it came with an inspection, and it requires inspection during the lifetime also, at a scheduled time. At a scheduled time. It means when you are purchasing an aircraft, you are aware that after expiry of a certain period, I have to incur crores of rupees in the inspection after every 5 years. So that become an important component, because you are assuming when you got the aircraft that inspection element is inbuilt in that, and now you have to incur this cost after 5 years. That is why you split it between 85 to 15. तभी तो आपने स्प्लिट किया ना उसको, ओके?
सर यहाँ
क्लियर
ये
है?
डेप्रिसिएशन क्यों नहीं आया सेकंड केस में?
वो डे वन का ही है ना, वो आपका डे वन ही है ना। सो लेट मी मोर क्लैरिफाई हियर, सेकंड केस में डेप्रिसिएशन क्यों नहीं आया? रिवाइज ग्रॉस ब्लॉक एंड नेट ब्लॉक on the day of incurrence of inspection. Clear?
Sir,
Up.
like you have shown Indigo balance sheet that major inspection cost has been put as a separate line item. Do we also require an examination to make it in a separate line item, or we have to club it?
I have shown you in the separate line item ना, you have to show the calculation as a separate line item. मैंने भी तो आपको separate line item में दिखाया है calculation. I have shown you aircraft. See my presentation. How I have shown you. The header is aircraft, and there are two line item of aircraft, right? If you see my presentation of the last example, what is the header? The header is truck, and there are two component of truck, right? This is how you have to show. Okay.
Okay.
Shall I move forward? Okay.
Sir, instead of assuming 20 lakhs is the inspection cost, if question is silent and given is in every 5 year, inspection cost will be 15 lakh. Then
of course yes. Of course yes. Then same.
Okay. And in the last example, in truck example, if we are maintaining fixed asset register physically, and we are maintaining continuously for 10 years, and at the time of replacement of engine, if we will create a new page for engine, or we can update in the truck item
So
for
you
the
know, so
replacement
I
or
understood, because you are maintaining physically, right? And there
yes.
is no line item there.
Okay.
So in that case, what you can do, you can, of course, either you can put a fluid, right, which is not allowed and which is not the right
Yes.
thing. So whatever changes you have done, you can put those changes in the latest, in the current line item. Means, let's say when this replacement is happening, what you will do when the replacement is happening, you will add this as a separate line item. Okay.
Okay.
You will,
In that component or
because when you are maintaining a fixed asset register, you are also, you are not only you are not only maintaining your FAR for the purpose of addition, you are also putting deletion. Otherwise वो माइनस कैसे होगा? आपको अगर डेबिट एंट्री तो क्रेडिट एंट्री भी तो डालनी पड़ेगी ना FAR में।
yes sir.
तो आपको उसका डिलीशन भी डालना पड़ेगा और न्यू एडिशन भी डालना पड़ेगा कंपोनेंट।
Okay, mean the same ledger of truck.
Yeah, same ledger truck. Yes.
Okay, thank you, sir.
Yes. Subsequent cost replacement of parts, this we have discussed. Now this is illustration number 8 from ICAI study material. Now you guys are champion, and I know you will do this illustration in just 2 minutes, right? MS Limited has acquired a heavy machinery at a cost of 1 crore with no breakdown of the component parts. The estimated useful life is 10 years. What is the per annum depreciation?
10 lakh rupees.
10 lakh rupees.
10 lakh.
At the end of 6 year, in 6 year, what is the accumulated depreciation?
60 lakhs.
What is the gross block?
40 lakhs.
What is the gross block?
1
Gross
crore.
block 100 lakhs.
1 crore.
1 crore gross block, 60 lakh accumulated depreciation. What is the net block?
Net block
40
lakhs.
lakhs.
40 lakh. Your mind is trained in a way that if he has asked accumulated depreciation, so next question he will ask net block. So one of the major component of this machine, the turbine require replacement. In my example, engine require replacement in the truck. Here, turbine require replacement. As further maintenance is uneconomical, the remainder of the machine is perfect and it is expected to last for the next 4 years, right? So if this turbine get replaced, the machine is perfectly all right other than turbine, okay? The cost of new turbine is how much? 45 lakh. The discount rate is given. I don't know why discount rate is given. The discount rate is given 5%. The cost of new turbine is 45 lakh. Analyze whether the cost of new turbine can be recognized as an asset. What happens with this new turbine? We will charge it to the P&L, right? What should we do?
Capitalized.
No, sir. We need to capitalize, sir.
We need to capitalize. Okay. Yes, we need to capitalize. And if yes, the first question was, will you capitalize the cost of new turbine or you will charge to expense? So you guys told me we should capitalize this turbine cost. Okay. And if yes, then how to apply it? Suggest me. This machine has already one turbine. Now you purchase another turbine also, but machine will have only one turbine. So how you will add 2 turbine into one machine in the books of accounts? कैसे करेंगे?
Turbine will be
Sir, we will
derecognized.
derecognize first turbine.
So
Or get into scrap.
old turbine you will de-recognize, new turbine you will recognize, right? That's what you are saying.
Yes, sir.
Yes, sir.
But you don't have any breakup of the old turbine cost. You have the 1 crore total machinery, 60 lakh total accumulated depreciation, 40 lakh net block at the time of replacement. That's all. And you have a new turbine cost also.
We
Sir,
will
we will
calculate, sir.
discount the new turbine cost for 6 years.
We will discount 45
Yes, sir.
lakhs and 5% for 4 years.
So
For
you are
6
saying
years.
current cost you will use as a surrogated cost to arrive at the estimated cost of the old turbine, right?
Yes.
Yes, sir.
So are you saying that I need to discount 45 lakh 6 years back?
Yes, exactly.
Yes, sir.
So you will compute the present value of 45 lakh 6 years back. That's what you are saying?
Yes,
Time value
sir.
of money concept you will apply. Okay. I think that's what standard ICAI study material has also done. The new turbine will produce economic benefit to company and cost is measurable. This is recognition criteria for subsequent cost. Hence, the item should be recognized as an asset. The original invoice for the machine did not specify the cost of the turbine. However, the cost of the replacement is 45 lakh can be used as an indication, usually by discounting of the likely cost 6 years previously. Saminathan, have you seen this word?
Yes, sir.
Yeah. If an appropriate discount rate is 5% per annum, 45 lakh discounted back 6 years amounts to 33,57,900. That is the approximate cost of turbine before 6 years. Okay. So this is the discounted value. The current carrying amount of the turbine which is required to be replaced of 1343,160. ये कैसे आया 1343,160? Or is, see, 1 crore was the total cost, right? Illustration number 8. 1 crore was the total cost ना?
Yes, sir.
ये आपको समझ आया नहीं आया? आ गया?
यस सर,
अच्छे से आ गया?
एकदम अच्छे से सर.
एकदम अच्छे से आ गया? Okay.
Yeah. We have to split between the 1 crore and that turbine cost.
So let me show you. Your 45 lakh is the new cost. Okay. 45 lakh. 5% is the discount rate. What is the discount rate? Current cost, discount rate, 5%. What is your this thing? Present value factor. What is your PVF? PVF 1 plus 5%, right? To the
Yes,
power
sir.
6 years
6.
back, na? 6. 1.34 is the discount factor. Your present value of old turbine. What is the present value of old turbine? 45 lakh divided by 1.3. 3357. Yes.
969.
So in your question, what happens? Let me tell you. In your question, so they have done the rounding off in hundreds. Okay. So आंसर अगर राउंडिंग ऑफ करोगे तो भी ठीक है और नहीं करोगे तो भी ठीक है. Okay. Yes. So what is my cost? My turbine cost is this much. So remaining is my 1 crore minus turbine cost and accumulated depreciation. What is my accumulated depreciation? What is my net block? कितना होगा? What was the original life?
Original life 10 years.
10 years. This divide by 10 multiply by 6. This divide by 10 multiply by 6. As you told me, the total accumulated depreciation 60 lakh. This is 60 lakh. What is my net block? This minus this. This minus this.
Yes, sir. Anyhow,
So what
we
is the-
provided the depreciation 60 lakhs.
So what is the value of the old turbine? Remaining value 1343,188. What is the accounting entry? Accounting entry क्या होगी? New turbine, PP, account debit. What is the value?
45 lakhs.
45 lakhs. 2, 3, 4, 5. 2.
Bank account.
Bank.
2 bank. What is the value?
45 lakhs.
45 lakhs.
45 lakh. What is the for recognition? New turbine. Derecognition of old turbine. Old turbine. What is the value?
13 lakhs 43,000.
What is the accounting entry?
Yeah, loss on
Two-
replacement of.
2 old turbine we will credit.
Yes, sir.
Okay. And what is the loss on replacement?
Yes.
Accumulated depreciation भी डेबिट कर सकते.
हाँ, ऑल्टरनेटिवली एक्यूमुलेटेड डेप्रिसिएशन और ग्रॉस ब्लॉक को डेबिट क्रेडिट कर सकते हो, राइट?
Gross block.
या सो यहाँ पर मैंने नेट ब्लॉक लिया है डायरेक्टली. आप ऑल्टरनेटिवली वो भी कर सकते हो. मैंने आपको एंट्री दिखाई भी थी. यस, इन माय ट्रक एंड इंजन एग्जांपल.
Yes, sir. Yes.
So this illustration number 8 is clear to everyone?
Yes.
Yes, sir. Very much clear, sir.
Everyone?
Yes, sir.
So major inspection overhauls we have discussed. Now we have reached to the measurement at initial recognition. Friends, at what value PP is going to be measured? PP is going to be measured at cost. What is the formula for cost? What is the formula for cost? Friends, the formula for cost is purchase price including import duty and non-refundable taxes minus trade discount and rebates. Friends, I have purchased a machinery for 10 lakh rupees. I have paid a GST of 18% on machinery. So 10 lakh plus 1 lakh 80,000. 11 lakh 80,000 is the value. 11.8 lakh is the value. Okay. So friends, 11.8 lakh is the value. So at what value this machinery is going to be capitalized in my books of accounts? Tell me.
10 lakh.
Why 10 lakh? Why not 11?
Because sir, we can get IPC.
Because I will get an input credit of 1,80,000. Okay. So 1,80,000 is not a cost to me. I have paid and I will get the input credit. So if it is a refundable taxes, if it is a creditable taxes, inputable taxes, then it will not become part of my cost of asset. But if it is a non-refundable taxes, for example, I purchased a machinery and I will not get a credit of GST on the purchase of that machinery. So whether that GST value will also be capitalized as a cost of asset or not.
Yes, sir, capitalized.
Yes.
Because it's a non-refundable taxes. So friends, purchase price plus import duty plus non-refundable taxes minus trade discount and rebates. Okay. Plus directly attributable cost. What is meant by directly attributable cost? Directly attributable cost means
सर जो उस कॉस्ट से रिलेटेड है जैसे अपलोडिंग मतलब लोडिंग अनलोडिंग चार्जेस.
yes. So directly attributable cost means had the asset not been acquired, the cost would not have been incurred. Right? अगर वो asset नहीं होता तो ये cost भी नहीं होती. Okay. And directly attributable costs are those costs which are necessary for bringing the asset into the location and condition for making it available for use. Right. So what is my directly attributable cost? Directly attributable costs are those costs which are had the asset not been there, the cost would not have been there. अगर asset नहीं होता तो cost भी नहीं होती. Right. And directly attributable costs are those costs which are incurred for bringing the asset into the location and condition necessary for getting it available for use. For example, the company has purchased a machinery from China for 1 lakh rupees. The company has paid a transportation cost from China to India for 20,000 rupees. Then from the Indian port to the company has also paid some carriage inward for 10,000 rupees. The company has also paid an installation fees of 20,000 rupees. What is the cost of machinery? Tell me.
Sir, 1,50,000.
1 lakh was the cost of machinery, which we have paid as a purchase price, plus 20,000 we paid for transportation, 10,000 for carriage inward freight, and 20,000 for installation. So this 20 plus 10 plus 20, this is a directly attributable cost. अगर ये machine नहीं होती, if this machine would not have been purchased, whether we would have incurred transportation, carriage inward, installation?
No.
Whether these costs are necessary for bringing the asset into the location and condition for ready for available for use?
Yes.
Yes. If you will not incur transportation or freight inward or carriage inward, how will you bring that machinery to your factory?
Yes.
If you will not install, how you will make this machine ready for use for production? Right? So the directly attributable costs are also going to be capitalized as a part of the cost of the asset. Okay. Initial estimate of the cost of dismantling and removing the item and restoring. Right? Initial estimate of the cost of dismantling and removing the item and restoring. Okay. What is this? Initial estimate of the cost of dismantling and removing the item and restoring. इसका क्या मतलब है? What is the meaning of this? I hope my PPT is visible to everyone. Yes, na?
Yes, sir.
Yes, sir.
Sir.
PPT is visible, sir.
Okay, fine. For a second, I realized that my Excel file is visible, PPT is not visible. Okay. Yeah, friends, tell me what is the meaning of this? Tell me. What is the meaning of the third leg? You guys are champion. Why you guys not speaking?
Yes, sir. After installation, the cost is dismantling and removing the item of restoring, which means dismantling cost.
So friends, let's say I have installed my factory into a lease premises. Okay. So government has given me a land, and government has given me a land for a lease of 30 years. Okay. And I have done some construction on that land. And when I am getting a land on a lease basis, and when I'm constructing a factory or constructing some bit of item on this land, I have a contract with the government. And you know what that contract says? Contract says that after expiry of 30 years, you have to restore that land in the same condition in which I have given it to you. Means you have to dismantle all your whatever construction you have done, you have to dismantle, and you have to restore this space in the same condition in which I have given it to you. Friends, don't you think due to installation, due to construction today, you have to incur an obligation after 30 years? है या नहीं? है ना? It is there na? So
Yes, sir.
standard says that. So why you have to incur an obligation after 30 years?
Sir,
Because you have done some bit of you have done some bit of capitalization today, because you have incurred some expenses today. You have done something today which will result in an outflow in future, and it is certain today also, because contract says that. आपका कॉन्ट्रैक्ट बोलता है, एंड आपको पता भी है कि ये होगा. वाई होगा? क्यों होगा? Because you have done some construction. So standard says that while capitalizing the item of PPE, while determining the cost in your purchase price, in your directly attributable cost, it is also like a directly attributable cost, because since you have done some expenses today in a manner, it will result in a certain outflow in future. So it says that the initial estimated cost of dismantling, right? The estimated cost of dismantling you need to capitalize at the time of initial measurement of PPE. And how it is going to be capitalized, let me tell you, right? So let's say the life of this asset is 30 years, because I have to demolish this asset after 30 years. So what is the life? Life is 30 years. And I know that after 30 years, I need to incur an estimated obligation of 20 lakhs. So what is the amount I should capitalize today? Is it 20 lakh or is it something else?
Something else, sir, not 20 lakhs.
What something else?
The present value of that 20 lakhs.
The present value of the 20 lakh today, which is going to be expensed after 30 years. Means present value of 20 lakh, which is going to be outflow after 30 years. So what is the present value today? Okay. So let me explain with the help of an example. Friends, measurement at initial recognition. Cost model we need to be used. Cost, it has to be at cost. What is the formula of cost? Purchase price plus import duty plus non-refundable taxes. For example, GST in case input credit will not allowed. Okay. Less trade discount and rebates if any. 2. Directly attributable cost. The cost, directly attributable cost means the cost has been avoided if the asset has not been acquired. 3rd, estimated decommissioning cost or site dismantling cost. Example, ABC Towers Limited has installed the telecom tower and spent 20 lakhs for the purchase of tower material, 5 lakh on the assembly and installation, and 2 lakh on the civil work. The life of the tower is 20 years, and after 20 years, the company is required to dismantle the tower and restore the space in the same condition which was there before installation of tower. The estimated cost of decommissioning and restoration comes out at rupees 10 lakh, right? It comes out at rupees 10 lakh at the time of decommissioning and restoration, means after 20 years. The discount rate is 10% for the company. Calculate the cost of the PP tower in this case and help with the accounting entries. What is my cost of the PPE? What is my tower cost? Tell me. Solution. कैसे करें?
20 lakh plus 5 lakh.
So first of all, my cost of PPE, purchase cost, right? So what is my purchase cost?
20 lakh. Material. Material.
Tower material cost.
20 lakh.
What is the tower material cost? Spend 20 lakh for the purchase of tower material. 20 lakhs. What is the assembly and installation cost?
5 lakh.
5 lakh.
5 lakh. Then 2 lakh on the civil work. What is the civil work cost?
2 lakh.
These are directly attributable cost, right?
Yes, sir.
2 lakh. And then there is a dismantling and restoration cost. Initial estimated decommissioning cost. Initial estimated decommissioning cost. Initial estimated decommissioning cost. Right. Initial estimated decommissioning cost. Now, how to compute the initial estimated decommissioning cost? So what is my decommissioning cost after 20 years? What is my decommissioning cost after 20 years?
10 lakh. After
10 lakh.
10 years.
How much?
10 lakhs.
10 lakh.
10 lakh. $10 lakh is my decommissioning cost. Right? What is the discount rate given in this question?
10%.
10%.
10%. Discount rate. Have you understood why discount rate is given?
Yes, sir. We have to calculate the
What
present
is my
value.
present value of the decommissioning cost? $10 lakh divided by 1 plus 10% to the power
20 years.
20 years. 148,643.
148,643.
644.
So what is my initial estimated decommissioning cost?
143.
Right.
48.
This is my cost of PPE. This is my cost of PPE. So what is the accounting entry I need to pass? इसकी accounting entry क्या pass करूं initial measurement की? Accounting entry at the time of initial measurement. What accounting entry I need to pass? PP account debit. PP tower account debit. Okay. What is the value? Debit. वैल्यू तो दिया है ना, ये आ तो गया, आपने निकाला ना वैल्यू.
84,864. 28,38,644.
Two. What is credit?
Credit to bank.
Complete
Bank.
amount?
No, 27 lakhs.
So no, the bank will be 20 lakh tower material, 5 lakh this, 2 lakh this, 27 lakh. Then what is the remaining amount?
To initial.
To what? To provision. Provision for decommissioning obligation. Obligation, right? Decommissioning obligation. To provision for decommissioning obligation. Decommissioning obligation. Credit. What is the value?
148,644.
This is the accounting entry. What is my depreciation per annum?
It's 28,48,644 divided by 20.
2848 divided by 20. 142,432.18, right? So whatever you have added in this provisioning for decommissioning cost, initial estimated decommissioning cost 148,644, it become part of your cost of PP, and this PP will become zero by the end of 20 years. This asset becomes zero. But what happens with this provision for decommissioning obligation, this liability? What happens with this liability? Tell me.
Yes, sir. We need to increase every year by 10% income expenditure and add to the provision.
So the present value of this liability, which is present value, is 148,644. What should be the value after 20 years? 10 lakh?
With 10 lakh.
10 lakh.
Because how much you need to pay? 10 lakh? So don't you think by some magic of accounting in 20 years, this value should have been 10 lakh? Don't you think you have to apply some magic of accounting?
Yes, sir.
What is that magic of accounting? Year.
We need, yeah.
So let me give you the calculation of the liability provision. So provision for decommissioning obligation schedule, right? Year. Year 20. Opening balance, interest cost, right? Opening balance, interest cost, closing balance, because payment तो कुछ नहीं होगी ना liability की. Closing balance. This is the typical schedule for every liability, right? This is the schedule for every liability. What is the opening balance? कितना है opening balance?
So 148,644.
148,644.
What is the interest cost in the first year? 10%. What is the payment? 0. What is the closing balance? Sum of, so this plus this minus this. ठीक है ना? Yes or no?
Yes, sir.
So what is my second year opening balance? This much. What is my interest cost? This much. Payment this. Closing balance this. If I will copy this calculation by 20 year, what should have been the closing balance? 10 lakh. What is the accounting entry every year? What is the accounting entry every year?
Interest expense debit and credit to provisions for decommissioning.
Interest expense debit to provision for decommissioning obligation, right? This is your accounting entry every year, right? With the number, with these number, okay, right? And when you pay after 20 year, this is entry every year. Now after 20 year, what is the entry after 20 year? Provision for decommissioning obligation debit
to bank.
Credit bank. Debit to bank. This will be the 10 lakh, right? This will be the 10 lakh. I hope this entire calculation is clear to you. I hope this measurement at cost is clear to you. I hope these 3 lakhs are clear to all of you. That how this entire accounting has to happen. Yes or no?
Yes, sir. Sir, also I'm thinking in parallelly, instead of expensing, if we invest 148,644 from day one, we will get some interest income also over a period of 10 years, 20 years.
So that is the time value of money concept, right? So that's the time value of money concept. You know that after 20 years, I have to expense 10 lakh rupees. You can start depositing the money from today itself. But how much? So let's say if I get an interest of 10% per annum, for example. So if I'll invest 148,644 today, I will get 10 lakh rupees after 20 years, right? So this is the time value of money concept, right? Okay. So this is the initial measurement at cost. This is how we need to measure this PPE. Is that clear? Very good. So friends, we discussed that The PP has to be initially measured at cost. And what is the cost? Purchase price plus import duty plus non-refundable taxes minus discount and rebate plus directly attributable cost plus initial estimated cost of dismantling and removing the item. Then what is the directly attributable cost? As I told you, the directly attributable costs are those costs. If the asset would not have been there, the cost would not have been there. And it is the cost related to bringing the asset to the location and condition necessary for it to be capable of operating in the manner intended by the management. Chhod do. It is a cost for bringing the asset to the location and condition for the purpose of available for use. Right? So these are the examples which are given. Okay. So employee benefit cost, site preparation, assembly, installation, transportation, professional fee, trial run expenses. Trial run expenses are also part of your cost of PPE, right? Which cost is not part of your directly attributable cost? Cost of conducting business in a new location or with a new class of customer. You have opened a factory in China. You have sent your staff from India and you are giving them a training for Chinese language. Whether the training cost will be capitalized. Is it a directly attributable cost? Answer is no. Yes. You have incurred a cost for the introduction of new product or services. You have incurred an advertisement cost. Okay. For introduction of a new product or services. Will you capitalize that cost? Answer is no. That is not a directly attributable cost. That cost is not necessary for introduction of a new product. That cost is not necessary for launching the product. That is more of a attracting a popularity of the product, right? Cost of opening a new facility. You have opened a new factory and you have invited Amitabh Bachchan to inaugurate that factory. And Amitabh Bachchan took 5 crores for the inauguration. Whether that cost will be capitalized? Is it a directly attributable cost? Had Amitabh Bachchan not inaugurated that factory, the machine will not produce goods? Yeah?
Yes, produce.
It will produce. It is not a directly attributable cost, right? Any administrative and other general overhead cost, audit fee. The auditor is coming to the plant. You guys are the auditor. You are going to the company. You are also auditing the factories, right? So whether your audit fee is also going to be capitalized as a part of those factories construction. If there are some under construction items or under construction assets, answer is right. So administrative and general overhead costs are also not going to be capitalized. Okay. Decommissioning cost we have discussed. So this example we'll cover later on. So friends, as of today, so we have started with the concept of property, plant and equipment. And what we have done, we have started with the concept of a property, plant and equipment. I have told you the list of standard into the various gaps. Okay. And then we have covered the definition of a PPE, tangible item which is held for use in production of goods or supply of goods and services and for rental purposes, administrative purposes and used for more than 12 months. Land and building held for rental purpose will not be considered as a PPE, but land and building used in business will be considered as a PPE. Okay. So then we discuss the recognition criteria. Future economic benefit cost can be measured reliably with the help of example. Then we discuss the concept of spare parts, standby equipment and servicing equipment, that it has to be accounted for as a PPE if it is meeting the definition and recognition criteria of PPE. Otherwise, it will be inventory. Then initial cost, right? And the subsequent cost. So we discussed that the initial cost has to be recognized as PPE if future economic benefit is probable and cost can be measured reliably. Same criteria needs to be seen from the subsequent perspective also, but the day-to-day servicing cost, labor cost, regular service cost needs to be charged to the P&L, but the major replacement, major inspection and overall cost has to be capitalized. While capitalizing the new component, if you are aware about the cost of the old component, please de-recognize that. Okay. If you are not aware, please use the current component cost as an indicative cost for arriving at the cost of the old component, right? By way of, for example, discounting. Okay. So this part we have discussed. Then we have discussed that after this thing, we have discussed that initially PPE has to be measured at cost. And what is the constituent of cost? Purchase price plus import duty plus non-refundable taxes minus trade discount and rebates. plus directly attributable cost plus estimated decommissioning cost or site dismantling cost, right? This is what we discussed, and we have also done a detailed example on all these three parts, right? And we have also seen how this calculation has to happen, right? I hope you guys have enjoyed the today's session thoroughly. You have understood what we have discussed. So today's session will create a good base for PP standard and the other standard as well. And in the next class on Saturday, we will complete this standard, right? Any doubt, any problem, any question so far?
No.
सर ये जो हमने एवरी ईयर इंटरेस्ट एक्सपेंस कर रहे हैं तो उसे मतलब इंटरेस्ट एक्सपेंस क्यों लिया गया, कुछ और हेड भी ले सकते हैं? और इंटरेस्ट एक्सपेंस ही हमने उनको हेडिंग दी है ना, इंटरेस्ट एक्सपेंस
बिकॉज ये क्या है, ये टाइम वैल्यू ऑफ मनी है ना. सो आपका ये 10 लाख रुपए आज की डेट में 148 वैल्यू है. सो द इम्पैक्ट ऑफ द टाइम वैल्यू ऑफ मनी इज कंसिडर्ड एज अ इंटरेस्ट कॉस्ट, एज अ फाइनेंस कॉस्ट. आपने 115 में पढ़ा था ना सिग्निफिकेंट फाइनेंसिंग कंपोनेंट, वहां पर भी तो टाइम वैल्यू ऑफ मनी का कॉन्सेप्ट था. तो डिफरेंशियल को आप क्या लेते थे, इंटरेस्ट लेते थे ना. सो वेयर एवर देयर इज अ इम्पैक्ट ऑफ टाइम वैल्यू ऑफ मनी, द रिजल्टेंट वैल्यू इज अ इंटरेस्ट. ओके, so this is how you increasing your liability. So you will recognize expense every year and you are increasing your liability. Okay, it is just like a loan. Today you have taken a loan of 148. You have to pay 10 lakh after 20 years. It means every year your this much amount of interest is getting accrued. That is why this 148 on the day 1 become 10 lakh at the end of day 20. Yes. Okay.
यस सर, एक बार इसकी लोकेशन बताना ना एक्सेल फाइल की, बॉस पे दिख नहीं रही थी, बॉस पोर्टल पे.
ये आपको आईसीआई बोर्ड ऑफ स्टडीज पे मेल डालकर आपको पूछना पड़ेगा. अजीत जी विल हेल्प यू, राइट? या और यू कैन राइट अ मेल टू आईसीआई. अजीत जी, आर यू देयर?
सर ज्ञान तो
यस. See, those kind of items, na, it is not like a prepaid expenses. In Jane Tire example, either it could be a PP or it could be inventory. Prepaid expenses also, you know, the time period is fixed. You don't know when you will use that tire, right? So prepaid expenses are those expenses where you are sure and certain that I am incurring an expense today and I'll use the benefit up to this period. Okay. So these are more like an inventory, and it's a normal parlance. The question which is asked by, I think, Akshay or Nitish, I don't know who has asked that question, but this is a very normal thing where the entity used to stock some spare parts and servicing equipment. So those are treated as an inventory. Okay.
Okay.
If the usable life is less than 1 year.
Understood, sir.
Yeah. Okay. So thank you so much, friends. We started this standard today. We did a lot of examples, concepts, and lot many things we have discussed, right? So thank you so much, and we'll complete this.
Sir, one last question. So,
okay.
Sorry, I missed one point. I mean, with regards to the inspection cost. So it's like inspection cost is the general cost. It's like it might not always create the economic benefit. So why are we capitalizing it and depreciating?
So see, as I told you, if the inspection cost is a normal cost, small cost, and it is not a fixed kind of a cost, you are not going to capitalize. And I have also shown you one of the example from the large listed company Indigo Airlines. Okay. Correct. In certain industries where inspection are the major component, major expenses has to be incurred. And without inspection, believe me, without inspection, you can't fly the aircraft, even if it is airworthy. There is a scheduled time, right? Yeah. For a life of 20 years, in every 2 years, every 5 years. So there is a certain timelines. And you have to adhere those timelines irrespective. You have your aircraft is giving some problem or not, irrespective, you have to go through with those inspections. Okay.
Yes.
And a huge cost. Okay, friends. Thank you so much. Have a good day. Bye-bye. Take care.
Thank you, sir. Have a fantastic day.
Thank you.
Thank you so much, sir.
Thank you, Ashok ji.
Thank you, sir.
Thank you, sir.
Thank you. Yeah.